let's take this discussion forward and understand what the impact could be. First up, whatever changes have been announced on the F&O side. Sriram Velayudhan, Vice President Alternative Research, IIFL Securities, is joining us on the phone line. Sriram, good afternoon. Thank you so much for joining us. Well, first up on the F&O changes, are they in line with what was expected earlier? And what kind of impact do you see in terms of F&O additions or deletions, if any?
Yeah, hi, good afternoon. So, yesterday late evening, SEBI released the much-awaited revised F&O eligibility framework. The broad contours of the new rules remain the same. Contours in the sense, in terms of the criteria like liquidity, quarter sigma, market-wide position limit, deliverable value and all, the criteria haven't changed. But the threshold for inclusion and exclusion has undergone significant change. In terms of quarter sigma, it has been raised from 25 lakhs to 75 lakhs. Market-wide position limit from 500 crores to 1,500 crores, and deliverable value from 10 crores to 35 crores. Additionally, one more criteria which is usually used for testing the liquidity of the index derivatives has been incorporated for stock derivatives as well. This is called the PSF framework. So basically, the liquidity will be checked across futures and options, as well as the open interest structure will be checked, assessing whether that stock after the introduction in futures and option is liquid or not. Overall, looking at the revised framework, the objective is here to rationalize the framework in the sense over a period of time, basis the liquidity, whether the stock sustains or not in the F&O space.
Sriram, good afternoon. Thank you for joining in. One of the objectives here is that the fact that this revision that has been made is to prevent manipulation and to ensure a lower risk to the system. Now, could you elaborate more on this as to how will this ensure that there is a lesser risk to manipulation simply because there is a criteria revision? Would that lead to a lesser risk of manipulation?
No, but in terms of manipulation, I think the criteria like quarter sigma, deliverable value, and all takes care of these elements. Because the very fact that, as you mentioned, the concept of if there is manipulation comes into picture. The threshold of raising the factors like quarter sigma and deliverable value should address these issues. At the same time, the very concept of market-wide position limit is a part of free float has to be there in the specific name at the end of the specific month. I think somewhere down the line, these factors are already getting addressed in terms of selecting the stocks. Post additions, a lot depend on what the price action in the stock is. But if you look at the eligibility criteria, somewhere in an inherent manner, these factors are getting addressed.
Okay, all right. I was going to ask you, as I asked you earlier as well, any big names which are expected after these changes to be in the F&O and subsequently in the September Nifty review, do you expect them to come there as well? Or these new norms would change what you had assumed earlier?
Sure. So, basis the revised criteria, we did some analysis. So, at this juncture, the way it works is in terms of the eligible candidates, it depends on the discretion of the concerned authorities. In terms of stocks that will get deleted from the futures and options, there is a fixed framework. Let's say if a specific stock is not fulfilling the criteria for 3 consecutive months, it should move out of F&O. So when we implemented the revised criteria on the existing universe, we found 64 to 66 names have potential to get introduced in F&O over a period of time, and roughly 24 to 30 names might get deleted if they don't improve in terms of the criteria that has been mentioned. Now, coming to your question of Nifty eligibility, As I said, introducing a specific name in an FNO has an element of subjectivity. Those stocks like Zomato, Geofinance and all, in terms of the eligibility criteria, are right up there across all the criteria in terms of liquidity, quarter sigma, market-wide position limit, deliverable value and all. So let's say currently the street is, we have two schools of thoughts in the sense currently the street expectation for Nifty September semi-annual review is Trent and Bharat Electronics in place of DVs and LTI. Let's say in an hypothetical scenario, Zomato and Jio Financial Services get introduced in FNO, these set of expectations can undergo significant change. Like in that case, Jio Finance, Zomato and Trent will become eligible in place of DV's, LTI Mindtree and Eicher Motors. So a lot depends on the stocks that get introduced in FNO. As I said, it's totally subjective.
All right, Sriram, we leave it at that. Thanks a lot for joining in, sharing with us your views on these important changes announced at the SEBI board meet yesterday. By the way, the market has